You ever get the feeling that, like, the economy's playing a prank on us?
You know what? I think we all kind of feel that way sometimes, right?
Right. Because for a while there, it was like mortgage rates were on this, like, s slide, 5 months, they just kept dropping, and we were all like, "Sweet, maybe this is the new normal." And then October happened.
October definitely threw a curveball, yeah.
It did. So that's what we're diving into today. Mortgage rates. What's going on? What's driving these trends? Why October felt a little like a plot twist? And to really unpack this whole thing, we need to talk about, well, the elephant in the room or maybe the gorilla, the Federal Reserve. What are they up to?
Yeah, the Fed always keeps things interesting.
Because last month, they made a pretty big move, right? Slashed those interest rates by half a percentage point. That's not small potatoes. And they're hinting that there might be another cut coming before we ring in the new year. So it's clear they're trying to, like, give the economy a little boost.
Absolutely, yeah. It's like giving the economy a shot of espresso. See, lower rates generally encourage people to borrow more, spend more, gets that economic engine humming. And typically what the Fed does with interest rates, well, mortgage rates tend to follow suit.
Right, exactly. But here's the thing, and this is what I find so fascinating. Mortgage rates were already falling before the Fed even made that announcement. We're talking about a drop from 7.22% down to 6.08%. And that was before the Fed made their move, almost like the market knew it was coming.
It's true. It's like the market had some insider information or something. You know, economists call this pricing in. Or imagine you're at an auction, right? And everyone knows this incredibly valuable painting is about to be brought out. The bidding, it might get really intense even before that painting is even on display because its value is already anticipated. And in a way, the market was sort of doing the same thing with those anticipated rate cuts. That initial drop in mortgage rates, that was the market saying, we see what you're doing, Fed.
Wow. Okay, that makes sense. It's all a bit of a mind game then. But here's the million-dollar question. If that initial drop was the market reacting to the expected cut, why did rates actually go up a little after the announcement? It's like everyone suddenly got nervous.
It does seem counterintuitive, but it's all about expectations versus reality. The Fed did what the market expected, so there is no big surprise to move rates further down. That little uptick, that's uncertainty creeping in. Maybe the market's not so sure about the Fed's next move anymore.
Okay, I'm starting to get it. But I'm also thinking about our listeners. This is where the rubber meets the road for them, right?
Yeah.
If someone's out there trying to buy a house, refinance, whatever, what does all this Fed stuff actually mean for them? How do they make sense of this?
Right, because this isn't just theoretical, it's about people's lives. And honestly, it makes planning a bit of a nail-biter because the Fed, they're making decisions based on what's happening right now in the economy. Two big things they're always watching: inflation and economic growth. So let's say inflation heats up. That means lenders aren't getting as much value from the money they're lending. Naturally, they tend to raise rates to offset that risk. On the flip side, if the economy starts looking shaky, the Fed might make even bigger cuts to try and get things moving again. And that, well, that could very well push mortgage rates down even further. Or, we could just end up in a holding pattern with rates bobbing around where they are now.
Right, and of course, it's not just the Fed making predictions, right? We've got all sorts of experts weighing in on what they think is going to happen.
We do, we do. And right now, a lot of those major institutions, they're predicting further drops in mortgage rates, but don't get too excited. They're not talking about anything too dramatic.
Yeah, no one's promising us a free fall back to 3%.
Exactly. Unfortunately, there's no crystal ball for this kind of thing. We're all just trying to read the tea leaves as best we can.
Which is why we're here, right? Trying to decode all of this. Now, before we get into what all this means for you and your big decisions, let's do a quick recap of September. As a lot of folks predicted, we did see those rates for the 30-year fixed-rate loans. That's the one most people think of when they hear mortgage, where the interest rate stays put for the entire life of the loan. Those did indeed go down, averaged just under 6.2% for the month. And no big surprise, the most dramatic dip happened right at the start of the month, with all that anticipation building up to the Fed's announcement.
Right, makes sense.
So the big question, and I bet everyone listening has this on their mind right now, is now the time to lock in a rate? Or do you hold off, maybe roll the dice and see if things get even better? Because there's no easy answer to that, is there?
Oh, I wish there was. But unfortunately, it's not a one-size-fits-all situation. It really depends on your own personal situation, your risk tolerance, your financial goals, how long you plan to stay in your home, all sorts of things. The important thing, more than anything, is to be informed, Understand the factors at play so you can make the best choice for you.
Exactly. And that's why we do these deep dives, to arm you with the information you need.
Yeah.
Because, hey, buying a home, refinancing, it's a big deal. We want you to feel confident in your decisions.
Absolutely. Knowledge is power, as they say.
Couldn't agree more.